What's going on, guys? It's Daniel from CoinSpots here. And today we've got some pretty big news. Bitcoin is almost at 10,000, which is pretty crazy. Um, in addition to that, we're going to be looking at a couple altcoins as always, and then talking about a few pieces of news that can impact the market. Um, One such being the number of Coinbase users has surpassed the number of brokerage accounts on Charles Schwab. We're also going to be talking about the whole concept of market reflexivity, and then a couple pieces of news that might affect the whole cryptocurrency markets in the long term. All right, so let's get right into the technicals. On the Bitcoin dollar chart, or Bitcoin daily chart, excuse me, on Bitstamp. And we're definitely well out of the channel here on the daily chart, which is pretty crazy. If we go back to the 4-hour chart, we are most definitely out of the channel. RSI on the 4-hour is extremely overbought, but when you look at the daily chart, we're still around 70, 76-ish RSI, so there's still definitely a lot of room to move up. And on the MACD, I just pulled up this indicator here. There's still no sign of a bearish MACD cross, so you know I think that 10,000, we're just full steam ahead to 10,000. And that's simply because it's so much of a psychological level right now that even if we don't hit 10,000, we're going to be almost at 10,000, right? 9,900 something, you know, because, most likely what's going to happen is a lot of big money is going to be shorting Bitcoin because everyone believes it's going to, go to 10,000. So kind of just like we saw when Bitcoin almost hit 5,000, um, institutional money was shorting Bitcoin, and we didn't quite reach 5,000. We were just pretty much a couple of dollars away from hitting 5,000. And that was simply because 5,000, big, huge number. Same thing with 10,000. Those big evens um, is or the big evens are the iconic points for Bitcoin. So until I see a bearish MACD cross here on the daily chart for Bitcoin, not really going to be too concerned about exiting my positions on Bitcoin. Um, it's been a crazy run up this year, considering at the beginning of the year we started, I believe, like around $1,000, and we've 10x'd. You know, Bitcoin has 10x since the beginning of this year, and that was way before I got into crypto. So, but taking a look at the 100-day moving average here, I've put this up because I wanted to get an idea of where Bitcoin would correct to. Um, just considering we've been so overextended for the past, I think it's like almost 3 months now, because our last correction was in mid September, and right mid October, mid November, and we're pretty much at the beginning of December right now. So it's heading on to 3 months that or that we aren't going to have a correction. So the market is definitely overextended, and I mean for pretty much all of 2017, we've corrected at this 100-day moving average, right? So if I, just draw a little bit on the chart here, we've been pretty much touching this 100-day moving average like so on these 4 spots here. And if Bitcoin corrects down to the 100-day, we're going to be looking at potentially around a $5,000 Bitcoin. So around a 50% correction. Um, some people might say that that is crazy, but considering that we've just been on this huge bull run since mid-September without cooling off really at all. I know, you could say like around here, around mid-November, we had a slight cool down, but that correction, I wouldn't even call that a correction. That was just a slight dip really in Bitcoin. We need to cool off the engine here because we're running super hot and a correction is much needed. And based on just how long this stretch was, a 50% correction doesn't seem unlikely, right? These past two other corrections were about 40% ish. Let's see if I can get these marks out without deleting the channel. um, oh man, this is going to be a pain. But basically, as I said, those last two corrections were around 40%-ish. So even if we see a roughly 40% move down in Bitcoin from 10,000, let's see if I could get, all right, 10,040. If we see a 40% move, that would put us around 6,000. So anywhere between 5,000 and 6,000 is pretty fair game for Bitcoin to be correcting to, and that's a pretty substantial correction. Now, moving into a little bit longer term analysis, I was taking a look at the chart all the way back here. Oh well, we could take out this moving average now. Don't really need it. Now this is just purely based on speculation. You know, literally just trying to find some kind of trend to go off of. But I mean, as we know, you know, Bitcoin doesn't really, follow a trend as we saw with this huge run up. Basically, I was thinking that Bitcoin was going to top at 6,000, and oh boy, how wrong I was. You know, I remember at 6,000, I was saying, all right, we're going to be correcting down back to 3,000, and oh yeah. But looking at the chart on pretty much the majority of Bitcoin's life here since 2011, we had a huge run up here all the way to around $1,200 before we corrected to around $200. And if we draw a trend line here, let's draw it a little more out. We can see that Bitcoin was relatively hugging this trend line, excuse me, back here before we shot up extremely far from this trend line, right? So this was about 100% away from the trend line. And this same move is happening here, right? So pure speculation here, but if Bitcoin were to have a correction like this much that it had from $1,200 all the way to $200 ish, an 80% correction, that that would be pretty ridiculous. Obviously, this is just me spending probably spending a little bit too much time on the charts, but it's something worthy to look at. Just going to take this out and put this back to normal, back to the auto scale. Just something to think about because, as I said in the last video, Bitcoin has definitely been going parabolic, and a pretty big cool down is needed, considering we've 10x since the beginning of this year. So yeah, 2018, make sure you know what you're doing with with crypto. Potential correction could be coming. Um, Other than that, oh, Litecoin, yes, that's what I wanted to look at. Litecoin has been very strong. Um, we've bounced off of this 0.786 fib level here and then have pretty much been riding this trend line up. We had this head and shoulders here, and we pretty much saw what happened to Litecoin after that. So hopefully Litecoin is recovering here. We've just been bouncing off this trend line on the short term, obviously here. So if Litecoin can regain its strength, we could definitely see $100 Litecoin by the end of this year. Um, if it somehow doesn't, Litecoin is probably going to be going back to the $50 range, something that I personally don't want to see. I think Litecoin is very undervalued right now. Um, let's see what else here. I think Neo, yes, Neo. We had a run up on Neo the other day to the previous highs. I think it was around $50 ish, but then we cooled off a little bit, and I noticed we were in this kind of wedge pattern here. So as we continue consolidating, this is either going to break to the upside or the downside. I'm thinking the upside, just considering the position of Neo on the total market cap. Neo is definitely a huge player. I think it's number 7 right now. So I think considering all the optimism on Neo, we're going to see a break to the upside on Neo. Ether, yes, Ethereum. Ethereum's had a crazy run up. As you all know, we've been in this ascending triangle formation, and just a couple days ago, we broke through and we just steamed past 400, and we're honestly close to $500 right now, which is pretty crazy. Considering Ethereum, um, has been hacked a couple times with the wallet hacks recently, and their updates were pretty lackluster. From a community standpoint, Ethereum is doing really well, and definitely at this time next year, I could see $800-900 Ethereum. Um, the last player I wanted to look at was EOS, and if you don't know, EOS is pretty much a competitor with Ethereum. They're kind of doing the same thing with the smart contracts and decentralized applications on these smart contracts. EOS, Ethereum, it's basically an ecosystem to build projects on. And EOS has just pretty much been going through the classic ICO reversal. This is at the when the ICO just launched, and typically with all ICOs, there's a huge sell-off, and this was going on since, what is that, July of this year. So a couple months of just straight selling. And then down here was, I believe, when institutional money just came in. We see this huge volume in here, pretty much all green bars. And then we cooled down a little bit, had another run up, cooled down a little bit, and just had another run up. So EOS is definitely getting some momentum here. It bottomed out at 50 cents, and I think we're at around $2.50 ish, around that mark. So EOS is definitely going to be one to look at. Um, EOS, Ethereum, and Neo are pretty much doing similar things. So it's going to see what happens on the long term with them. Alrighty. So now getting into the news, we've got this little article here that Coinbase accounts have reached 13 million, where Charles Schwab brokerage accounts are at 10.2 million. And this is actually pretty significant because it just shows the consumer optimism for cryptocurrency nowadays. Um, you know, everyone and their mom seems to be getting on this train now. And I mean, guaranteed, we still have a long way to go. I'm not saying that like everybody knows about Bitcoin. We just had Thanksgiving, and I'm pretty sure a lot of you guys have been having the whole cryptocurrency discussion with your family. And there's one person who's super optimistic about it, and then there's another one who's just super skeptical about it. So we still have a long way to go in terms of convincing the masses about cryptocurrency. But this is just a pretty significant um, point we've reached really in the whole crypto community. That there's more Coinbase accounts than brokerage accounts on Charles Schwab, and really, as I said, it goes to show that more everyday people are getting into crypto, and I think that's better, or not better. I was going to say better than institutional money, but I mean, at the end of the day, we do need institutional money to run up the prices. But considering the whole concept of cryptocurrency is supposed to be decentralization, um, tokens in the hands of the people are much more favorable than tokens in the hands of these millionaires and billionaires, because that would just defeat the whole purpose of cryptocurrency. But yeah, this article, or brief article as a whole, should just show you where the tides are turning for crypto. So moving on to the next news bit. Mike Novogratz doubles down on 10K Bitcoin. So Mike Novogratz is millionaire, billionaire, I don't even know, guy with a ton of money. That's all I can say. And he was the guy that back here when Bitcoin dipped, right here, he bought up. I think it was like 100,000 or 100 million. I'm not even sure. Just a large amount of Bitcoin that, and he didn't allow the price to go down anymore. And what I wanted to discuss with this article is the whole concept of market reflexivity. And basically, market reflexivity is a theory, market theory that I'm not sure if it was George Soros who came up with it. I know he used it. I'm not exactly sure if he came up with the theory, but basically, it's whenever you state something is going to go up, people buy into it because of the whole sentiment behind it. Now, basically, that was probably a pretty poor example or poor explanation. When I get into the example, it'll make more sense. Um, since so many people now, so many of these big names, Mike Novogratz, and there have been a couple other guys, millionaires who've been betting on Bitcoin 10,000, right? There's different articles where this guy, doubles down on Bitcoin 10,000, or this guy sees Bitcoin 10,000 by the end of the year. And basically, when all of those articles come out, people believe that Bitcoin is going to go to 10,000, so they buy into it. So it's basically the Bitcoin reaches that price because everyone is buying into it, since these big guys are saying it's going to reach that price. Um, it's basically like on Twitter, if you follow any cryptocurrency Twitter accounts, and they post, this, shit coin is, going to go up, I don't know, 50, 60x. And then they list a couple reasons why it's going to go up that way. But then another crypto, Twitter account gives a different, amount of reasons why it's going to go up. And at the end of the day, all of those reasons are pretty much BS, because the only reason it's going up is those Twitter accounts said it was going to go up, so people buy into it, and that's what causes the price to go up. Just the entire sentiment of the market. And that obviously is on a much smaller scale. With these big investors doubling down on Bitcoin 10,000, the price is going to reach 10,000 or almost 10,000 because everyone believes it. And I think that's the best explanation. Everyone believes the price is going to hit that point, so everyone's going to keep buying into it until the price hits that point. And the whole concept of market reflexivity is pretty interesting. That's pretty much how George Soros made all of his money. And it's interesting just to see that markets work like this pretty much. And obviously, since the crypto market is purely based on emotion and speculation, um, and news, stuff like this really does influence the price of a coin. Everyone's saying that it's going to hit a target price. You better well believe that it's going to hit that price or almost hit it. So this is just something that you guys should be aware of. Oh, did I go back? There we go. It's just something you guys should be aware of. Like the next time you see someone on Twitter like promoting a coin. I'm not saying that you should be skeptical, or you should be skeptical of everything, but just know that that person, especially if it's a lower cap coin, has some kind of incentive behind it, right? Now, I'm not saying it's a whole pump and dump. It could be, but usually what the case is whoever puts out the post that this coin is going to go up for X, Y, and Z reason, and then he has like a chart. It's just because he probably got into that coin maybe a week before and got it at a really cheap price. So instead of him making 30 to 40% gains, he's probably going to be making 50, 60, 70% gains, where when his entire following buys into the coin, they're only going to make like 20 to 30%. Now, I'm not saying that that's bad. I'm just saying to think about why people promote certain coins, right? There's always some kind of financial incentive behind it. So to recap, that was the whole concept of market reflexivity. It's a pretty interesting read if you want to find out more about it. And especially in the crypto market, considering it is driven by greed, fear, emotion, and news, it definitely applies to the crypto market. So you should kind of understand that whole concept to really make you think about this market in a different way, and potentially make more informed decisions. So the last piece of news are these three tabs here. And I saw this article on Cointelegraph that Bitcoin is going to be the safe haven for the next stock market crash. And I started doing a little bit of digging, and basically this guy Martin Armstrong has come out with the economic confidence model, and we currently have passed this peak right here, November 24th to 25th. Now, obviously, all of this is just speculation, as all economic models are. However, he's based it off of previous, or because the economic confidence model is a time frame, and he's applied the same time frame to years prior, and at all of these peaks and troughs of this wave, pretty much, there's been some kind of major event that has either triggered the market to go up or to go down. And pretty much being at this November 25th level is a pretty significant point in the economic confidence model, that this guy's created, Martin Armstrong, excuse me. And basically, one of the things that I found was that the European Union is looking to freeze, or looking for the power to freeze assets in a bank. So pretty much, you guys know that banks keep a limited amount of money in reserves because they're loaning out the rest of the money, or doing whatever else with it to generate more money. So if everyone went to like withdraw their money from a bank, the bank would obviously collapse because it wouldn't have enough money to give everybody else. So basically, what the European Central Bank is looking for, or looking for the power to have, is the ability to freeze banks' assets. Um, so it basically wouldn't let people withdraw money from their bank that they are clearly entitled to. And it's interesting that this article came out around the 14th, and that European banks are discussing this at the same time of the turning point of this economic confidence model. So it begs the question on what they're preparing for, because I mean currently we're in the second longest stock market run um, of history. I believe right now it's at 103 months ish, and the longest bull run of the market was around 113 months. So we're almost there at the peak. So I think cryptocurrency could act as a safe haven for investors and just everyday people during a market correction or a crash, pretty much, because the market has just been skyrocketing for the past couple of years. Something that a lot of people didn't expect. But if something like this were to happen, right? If the European Central Bank had the power to freeze people's assets and not allow the bank to give out the money that people are entitled to. It's their own money in the bank, and at a time of economic crisis, these people can't access their funds at a bank. I think a situation like that would really, really boost the favorability of cryptocurrency. Um, Considering that cryptocurrency itself was based off of the economic crash of 2007 and 2008, where we did see this, banks not allowing people to withdraw their money, or only allowing people to withdraw a certain amount of money. We didn't have crypto back in 2007 and 2008, but we do now. So when the market correction does happen, and legislation, and if legislation like this is passed, I think it would be a very big booster to cryptocurrency. Um, and a lot of people are probably going to step into the crypto market because of this. So yeah, definitely something to think about on the long term. Um, Definitely has correlation with the cryptocurrency market. So yeah, thank you guys for watching this episode. I'm going to be, trying to make these episodes on the daily, Monday through Friday, and then on the weekends, I might come out with some other type of video, whether it's some, trading tips, how to read indicators, other stuff like that. But during the week, I kind of want this session to be technical analysis, fundamental analysis, and macro analysis all combined together in a kind of podcast-like show here, where you get a little dose of everything, really, because at the end of the day, it's those big three things: technical, fundamental, and macro analysis that you're going to want to be looking at when or analyzing the crypto markets. So hopefully I kind of combine all of that in a good way here and give you a recap of what's really going on in the market as a whole. So yeah, nonetheless, thank you guys for watching. Please like and subscribe. Trying to grow this channel, and I'll see you guys in the next video.